Welcome everyone. Thank you for joining us today. We'll just give it a few more seconds to allow everyone to enter the room. Welcome everyone. Thank you for joining us today. And I'm going to hand it over to Laszlo to start the presentation. Thank you.
So the presentation is already on screen. Can everyone see it? Carolina?
That's great. That's great.
Yes.
Thank you,
All
Laszlo.
right.
Okay, so I think we can start. Welcome, everyone. It's a pleasure for me to be your moderator for this session this afternoon. My name is Carolina Latorre, and I'm with the Waste Foundation in the Netherlands. But today I'm going to be talking with my colleagues from the Finnish program. And before we get into that and to the very interesting things they are doing with their partners, we want to talk today about unlocking institutional finance for WASH. We've read, I think, and World Toilet Day that there is over trillions per year that we need to invest into achieving the Sustainable Development Goals, and specifically sanitation. And obviously, countries are not able to do that by themselves. So we need to do a little bit more, and we need to reach to unusual stakeholders. So to talk about that a little bit more, I would like to invite Valentin Post. He's the CEO of the Finnish Mondial program. And I would like to ask you, Valentin, what are you doing about this gap?
Valentin, you're in mute.
This happens to even experienced people in the Zoom world. It's a great pleasure to be here. It's our first time appearance at the UNC, so I'm really looking forward to the interactions afterwards. Before I go into the way we approach it, I think sometimes a short video can tell more than words. So if you can start a short video, and then I'll come back to you afterwards.
Great.
Finnish Mondial is a partnership between Waste, Amref and Aqua for All, and stands for Financial Inclusion, Improves Sanitation and Health. It's a programme working towards safe sanitation for all, and is implemented in India, Kenya, Uganda, Ethiopia, Tanzania and Bangladesh. Finnish Mondial ensures people are aware of the need of a safe and durable toilet. They want to buy one, can afford it, and local people can build them. But what does this mean? Women like Anna from Kenya and girls like Juhi from India have a healthy and safe life and can develop themselves. They can work and go to school as they no longer get ill because of water-related diseases. Because of the Finnish programme, sanitation marketeers like Emmy from Tanzania feel they are doing something for their community as they tell people about the importance of a safe and durable toilet, which trained masons like Manu from Ethiopia can build. They now run a successful sanitation business. And farmers like Abdul from Bangladesh use the fecal sludge from the newly built toilets as co-compost for crop production. Therefore, communities are healthier and have climate-resilient food. Finally, financiers like Mr. George from Uganda supply sanitation credit, and local governors like Miss Gamutu from Kenya stimulate sanitation market growth and awareness. By applying a multi-stakeholder approach, the Finnish programme involves the entire sanitation value chain. Over 5.6 million people enjoy the benefits of safe sanitation thanks to the programme. This is only the beginning. Let's create a global sanitation revolution together.
Well, that is a great video, Valentin. I think it provides a very good picture of what the Finnish Mondial program is. So thank you for sharing that. But can we get into a bit more details on how are you going to unlock that funding gap?
Yeah, thanks. First, let me take you back a little bit into the history of where we're coming from. We started as a public-private partnership in 2008, 2009. And up to today, we're still thriving as a partnership. And I think that's a great achievement to have public and private partners working together for such a long time and actually growing in the process. We started with a couple of big organizations, Tata IEG, SNS Real, United Nations University based, and the Dutch government. But we have expanded over the years. So in 2013, we went to Kenya. We went to the other 4 countries, which were mentioned in the video in 2018. So today we're covering 6 countries, and we're really working on the financial innovations. And the financial innovations are multifold, but they are all linking results to the financing systems. So it's very much a result-based financing system we have developed over time, and we're now at a scale that we can link it to the SDGs. Does it answer your question, Carolina?
I think so. And maybe can you tell me a bit more about what are the ambitions for the coming years?
So by working with communities, creating demand at community level, because that's where it starts, working with institutions, financial institutions to on being able for poor communities to access this money, at the same time accessing money to build sanitation, at the same time having the private sector being there to build these systems. And that can work if the government sets an enabling environment. So that's the approach you saw in the film. This one, the diamond model. Now coming to the next part is what our track record has been. Yeah, it's difficult to say from yourself, but we think it has been very good. We reached over 5.6 million people with safe sanitation. Despite COVID, this year we're going to reach another 1 million people. We have 12 million working days in construction. The investments are sizable at 165 million euros, or that would be about 180, 190 million dollars. Interestingly enough, there's some of these other facts we're finding out. Some of them are first-time bankers, and the majority of them are women. And we are working more and more on the circular sanitation economy, and it's in the form of compost and other materials to be used in agriculture. At the back of it, we are also working on school sanitation. So that's what we have achieved till date.
And what do you expect to achieve in the coming future? What are your aspirations forward?
Yeah, so thanks, Caroline. So if you look at it, we have, let's say, done roughly 10 years to achieve these goals. Now, our ambition is to double the results in the next 5 years. So we're looking at 10 million people, or 2 million safely managed toilets, 16 million working days in construction, and the circular economy in sanitation is what we really seek to develop in the coming years, and we're making inroads in each of the countries. It's a process, but we are making good progress.
Those are very impressive numbers, Valentin. So I think you have a team where you require a lot of creativity and innovation. So I think that's a good point, and I would like to invite my next speaker to the room and to join this conversation. But before I do that, I would like to invite everyone to make sure you are interacting with the speakers. You are asking the questions you want to ask and adding your comments, but you cannot do it through Zoom. You have to do it through the Pathable platform. So please go back to the Pathable platform where you entered for this session and add your questions there in the chat box. One of our colleagues, Lauren, is there, and so she will be monitoring your questions and making sure that we all are reading them out loud and answering them either in this session or following up with you soon. So that's my note before bringing up Pamela. So Pamela Bundi, she's country coordinator of the Finnish Mundial Kenya, Finnish Inc., but she's also the secretary of the Fund Mobilization and Financial Innovations Working Group of the Finnish Mondial program. So I want to ask you, Pamela, why innovations are so important? Why financial innovations are critical, you say, for water and sanitation?
Thank you, Carolina. So as Finnish Mondial, we are looking at how can we deploy the funding that is within the private sector into water and sanitation in a smart way that is bound to create sustainability in the long term. And so for this, I'll just jump straight to my presentation and look what is the gap that you're trying to address using these financial innovations that we have developed under Finnish Mondial. So the first thing is that there's lack of demand for sanitation. Traditionally, most communities will demand a lot of water, but then sanitation is one of those areas that are secondary to the needs of the household. And secondly to that is that we work with communities and other people within the communities to create demand for sanitation, but how do we get them remunerated for the efforts that they put in, for the transport costs that they utilize, the airtime that they use to call these committees. So we need to reward that with performance, and the reward needs to be deployed innovatively so that it's sustainable. So the first thing is that we need to create this demand and to encourage communities to take up the sanitation facilities and reward this performance that is being or the efforts of the community health volunteers and other marketers within on the ground. Secondly, there are supply side issues that are there. We need to incentivize the youth and women for them to get into sanitation businesses. And with that, we are able to address issues of employment within the countries that we are working in. And beyond that, create opportunities for the youth and women to get some income. And that way specifically looking at sanitation business opportunities, which normally are not attractive. So with that, we encourage funding into the sector for sanitation businesses. The other bit is valorization of fecal matter through safe reuse practices, which again is a sector that is known to take time to break even in terms of profitability. So once again, it requires financial innovations to put in money for that. Then lastly, we're looking at economies of scale, and with this, we need to increase the private sector support and involvement for the into the sanitation sector. The other bit is that there is generally lack of funding for the sector, and we need to use the scarce resources that are there in smart ways to create the enabling environment. And in this, we're looking at touching on technical and vocational training institutes. How do we get them to specialize in training for in the construction and maintenance of sanitation facilities? Then lastly, generally speaking, our financial institutions will rather focus in other sectors that they find more profitable. So for us, we need innovative financial solutions to build a business case within the financial institutions, and to engage different types of financial institutions, not just the mainstream banks, but also going down to microfinance institutions, circles, and other working with other informal financial institutions, just to show them that there's business in sanitation. So with this bottlenecks, as Finnish Mondial, we have looked at, we have come up with various solutions that we are implementing in the project. Next slide. And these financial instruments, technologies, they range. I'll start with valorization of fecal sludge for carbon financing. We are doing fecal sludge treatment plants in the countries of where we are operating. And with this, the processing of the fecal sludge to organic waste, we are selling it for renewable energy and also agricultural input, impacting positively on the carbon or the CO2 levels in the environment. Secondly, we are looking at international institutional investments that are available for sanitation. And with this, we rolled out the first series of a sanitation impact fund, the first being 50 million euros that is being rolled out end of this year. And this is in partnership with ACTIAM and Finnish Mondial, and you'll hear a lot more about it in the subsequent presentations. To reach out to the communities and the informal financial mechanisms on the ground. These are the merry-go-rounds, the table banking, and especially in the African countries and Asia. We have also, we invested in a e-ledger platform, a transactional ledger, where now we work with these groups for them to do their savings and their informal loans on a digital platform. And this now creates a digital record that they can use with their formal financing institutions. That way, we're able to move them now from the informal to the formal, and even for the groups themselves, they're in a position to, it's more secure for them because the records now moved from hard copy to a digital platform that is more secure and creates a lot more trust within the groups themselves. The other bit is that in Kenya, we have what we call the financial inclusion for sanitation entrepreneurs, which we created as a result of the gap that we saw in the market, where small entrepreneurs who have no track record in terms of the financial history would fail to access funding from the formal financing institutions. And so with the FISEC, we work hand in hand with Sidian Bank to support them with capital to start the businesses. And as that is being done, they're receiving hand-holding to help them build a track record within the financial institution, and coupled with the business support that is received from Finish Mundial, they are able to also work on running their businesses professionally. Then lastly, we also have the Take a Stake Fund, which is more of an exit strategy for the businesses that have outgrown microfinance and yet are too small for the regular commercial financial institutions. And with this, the Take a Stake Fund comes in handy to provide the financial support required, and once again, coupled with a lot of business support from the Take a Stake Fund that we have within the group. And basically, the target for this are the small and growing businesses that would normally be in between the microfinance institutions and the mainstream financial institutions or commercial banks within the countries that we are working on. Thank you.
Thank you, Pamela. That's a wealth of information. I think it's very interesting, all these different tools that you are working with. Very fascinated. And I would like to invite now and talk about some of those with Mr. Abhishek Chowdhury. He's Senior Manager of the Finnish Society. And so I want to ask Abhishek, you are putting some of these things that Pamela was talking about in practice. So you're doing your deal to bridge the funding gap. And I would like to ask you about how are you doing this? What incentives are you using for that? How are you convincing everybody to support your mission? And yeah, tell me more about it.
Yeah, thank you, Carolina. So we are basically offering two things. And like, first of all, I want to tell you that we are working with the microfinance here in India. And we are offering majorly two things to them. One is the result-based incentive is provided to them. And the second one is the technical assistance we provide in form of capacity building and also field monitoring for them. And I would just like to tell you about our organization, Finnish Society. The name is pretty interesting, Finnish Society. So, but Finnish is basically an acronym, Financial Inclusion Improves Sanitation and Health. And the society was like formed in the year 2010, and basically to implement the Finnish project. It was launched in the year 2008-9. Then we realized that an Indian organization is required to monitor and to implement that project. So when we started implementation of this project, and we against a target of 500,000 safe sanitation systems, we could overachieve by 600,000 plus sanitation systems. And in that process, we also were able to leverage the Dutch grant to more than 20 times in 2016. And because of this performance and because of our commitment, we have also been a part of the Finnish Mundial project since the year 2019. And Finnish Society is basically implementing the Finnish Mundial project in India. Like here in India, the Finnish Mundial project As I earlier said that we are basically focusing on the microfinance company. So the model is like it's a holistic approach where we are not only dealing with the government, with the donors, but we are also dealing with the microfinance companies, their clients, their staff, and then with the masons, with the supply side, the vendors, the suppliers. So it is basically a network of, you'll say, the local, domestic, as well as international partners. And as I earlier mentioned, that the basic focus is on two things, like to track the MFIs, the microfinance companies. We offer the result-based incentive to them and also the technical assistance. I have to elaborate. So basically the technical assistance which we provide, it's like we initially identify a microfinance company who are formal, informal sources, and then we do a due diligence of physical visit to the organization and a meeting with their management. And then once we realize that yes, they are seriously interested in the sanitation business and they want to have an impact in this sector, then we go for an MOU with them. And once this MOU is done, then we start with capacity building. So we basically do a 3-tier orientation for an organization, where like we first orient the top management, where the aim and the focus is on making them understand about the vision of the project. And once they understand the vision of the project, they'll also understand that what is the positive for them in this. And then we do an orientation for the middle level management, where like both the vision is explained to them and also how the project will be implemented. So this orientation is a little different from the first one. And the third orientation is for the grassroots level staff, where the major focus is on safe sanitation technology, demand creation, because like these microfinance companies till now, they have been focusing on income generating loans. So now to make a shift from income generating loans to sanitation loans, so they need some kind of an orientation and some kind of incentive. So, and apart from that, we also help them with some IC material, some knowledge management tools. So at different levels, for their official levels also and for their clients as well. And to support them in the field, we have also introduced an operations team over there. So these people, they do concurrent monitoring, they do the loan validation of those microfinance companies. And so basically it is through an app. So in that app, we also capture the photographs of the toilets, and we also capture details regarding the safe sanitation technology, the usage of the toilet, the like financial details, like how much loan they have taken and what they have invested from themselves. So all these data is collected through that app. And this team then also does a demonstration in the field. They conduct village meetings for demand creation. So this demonstration is basically for the microfinance staff to see that how they have to go about doing the demand creation in their area. So, and this team also does orientation for the local level masons. So the vision is basically to train these masons. These masons, they know how to build a toilet. We are not like telling them how to construct a toilet. We are telling them about the basic mistakes that have been found in the area. So we orient them. It's a very focused orientation which deals with the major lapses that are found in the field, address the sanitation, like the safe sanitation technology. So this not only improves the sanitation quality in that area, but it also like capacitate these masons to enhance their income as well going forward. And we also, try to identify those businesses or those vendors who are into the wash sector. So to promote these businesses, we also try to link them up with finance and also do some capacity building, some orientations for these businesses. So this is the technical assistance package which we offer to the microfinance.
And you also mentioned that there was another component to what you do, which is result-based. Can you tell us a bit more about that?
Yeah, so we'll have to move to the next slide. And so like the technical assistance part is there. And we also have an M&E team. So this M&E team, what they do is basically they analyze the data collected by the operations team in the field. So depending on the data and the observation from the operations team, the M&E team, they provide the feedback to the top management of the microfinance companies for course correction, so if required. And also, once this feedback is given to the MFIs, then a third-party validation is also done by the M&E team. And after this third-party validation, the payouts are being done to the MFIs. So, and the basic objective is like to have 100% toilet construction to those loans, and also we need to focus on the utilization of the sanitation system constructed out. So through this incentive, we basically try to help these microfinance companies to bring down their operation costs to a certain extent. So which can motivate them to go for more and more sanitation. And they can also use this incentive for incentivizing their field staff, or they can also use this amount in creating more sanitation market and expanding their reach in the area. And ultimately, we also impact their monitoring system. So because we are monitoring their loans and a third-party validation is also being done, so it automatically impacts their own monitoring system. So due to which the monitoring system also becomes robust. So these are the basic two offerings we have for the microfinance.
And I know that this is not the only thing you're doing. You're also thinking about scaling up and attracting commercial investments. So you're working with some partners, but I would like to leave that question to our panel discussion. So I would like to invite now to join this conversation with you and me and with the rest of our speakers to Theo Brouwers. Theo is Managing Director of ACTIAM, and he's working on something very interesting, very different, but it's not so far from what we've heard from Abhishek and Pamela and Valentin. So Theo, what are you doing to mobilize investments and bridge this gap?
Yeah. Thank you, Caroline. Thank you also for having the opportunity to present the unique partnership that we have established to give this a new chapter in bridging the gap. First of all, I need to say that I'm a member of ACTIAM, employee of ACTIAM, and I think it's good to say to the audience, because it is indeed the first time that we have presented ourselves. ACTIAM is an asset manager who is famous, especially in Europe, for their ESG approach. So all the investments which we are doing on behalf of our investors are being ESG proved by an ESG overlay. ESG stands for Environmental Social Governance Overlay. And just to make clear that institutional investor community is really looking for SDG investments, investments who contribute to the SDG factors. And they do this via listed equities, listed bonds, but also via unlisted unlisted projects, so not listed on stock exchange. And that's exactly what we have done in the past 15 years. We have launched four funds in the financial inclusion sector, where we were looking for investments in developing countries in the financial sector, which provides loans to the lower part of the community. That's what we have done so far, and that's exactly our experience in the financial sector, in the financial inclusion sector, was also the basis why we have been looking to this innovative structure, this unique partnership, using our experience in the financial inclusion sector to partner with Finish Mundial and Aqua for All specifically. As you can see on this slide, we have built a partnership to use this for launching a fund meant for our institutional investors to invest in by investing in this fund, that we can reach out to this SDG 6, where we can build another 2 million safe sanitation systems. And by this partnership, where ACTIAM is responsible for the financing part, we use Finish Mundial for the technical assistance part, as Abhishek just explained how that works, and Aqua for All for the incentive part. Why do we need this partnership? It is extremely important to get in financial institutions in this market, to convince them that there is a market which for them is also profitable, but by offering them a finance part, by offering them a technical assistance package, and at the same time offering them an incentive, a financial incentive, if they reach their targets, which we will pick up in the loan agreement with the specific financial institution, we incentivize them to use the money that we lend to them, to use that for sanitation loans. And that's how this unique partnership has been established. And I think this is indeed unique. I've never seen it before in the market. And by using this partnership, we can bridge that gap between projects where we think, yeah, extremely interesting, but how can we make them accessible, investable for institutional investors? And that's why we need the other partners to get in.
Thank you, Theo. And may I say, you're not a usual suspect when we come to talk about bridging the gap for sanitation and reaching out. I don't imagine you building a toilet. I'm sure that's not exactly what you do. So maybe can you bring down a little bit more this concept you've been talking about, what you're doing with your partners? What is exactly that you are working on?
Yeah. Thank you for the clarifying question, because that's indeed neat. We have investors who are asking us, we want to invest in SDG projects. How do we do that? That's how we launched this ACTIAM Sanitation and Water Impact Fund. It is the first series, it's the first fund of a series. It's a fund of 50 million euro. That's what we are aiming for the fundraising, based also on the capacity which we can use. And with that money, we finance financial institutions, which we have sourced in a way where we are offering them this technical assistance package and this incentive. And these financial institutions, they need to use the money to give sanitation loans to the households and the micro entrepreneurs to build and to sustain safe sanitation and water facilities. That's how it works. And if everything goes according to plan, we will reach the targets that we have set for this whole Finish Mondial program. And this technical assistance package is extremely important to have in our offering, because a lot of financial institutions, they need help, they need support, they don't know how to do it, and that's how this TA partner comes in. And to incentivize them also financially, we want to give them an 1% interest rate discount if they reach the impact targets. And for investors, it is necessary that we verify these results so that the investor, in the end, they get a good financial return if you compare that to the risk return demand. And at the same time, they get a verified impact. So this is also for investors a unique opportunity to invest in an SDG target market with an attractive risk return profile. And by using this fund, we can reach out to a huge amount of institutional money, which is waiting for investments. Yeah, this slides give you just in one shot what it's all about. So we are looking for the first fund for 50 million with a target return of 2 to 4% net of fees and losses, and at the same time gives an impact where we make sure that this impact has been monitored, realized, and verified.
Great. I mean, this sounds a really interesting new concept, Theo. And now I think we're ready to broaden our discussion. So I would like to invite back Valentin, Pamela, and Abhishek to join us in this discussion with Theo. Hello, everyone there. Welcome back. I would like to ask first, do we have questions from the audience, Lauren?
Yes, thanks. We have a lot of questions. So thanks for sharing in the Pathable platform. I think I'll invite Pamela first to answer some of these questions that are clarifying the Finish Mondial program approach. Lewis was asking, is there any subsidy level in the sale of the toilets to the households? And what is the average income level of the households who purchase toilets? Maybe Pamela, you can answer.
Thank you, Lauren. So for the whole of Finish Mondial, we are a no subsidy program. And that's why financial inclusion for us is really critical, because we are harnessing on the private sector funding that is within the market of the countries. And we support communities now, the poorer or those who cannot afford to invest in sanitation upfront. We support them to access finance through our financial partners. which range from the commercial banks, microfinance institutions, and the SACCOs. And that way they are able to pay the loans that were used to construct sanitation facilities over a period of time that ranges between 6 months to 2 years, and sometimes this is considered piece by piece, so it can also go up to 3 years. And it's also coupled with financial literacy classes. So in short, there's no subsidy attached to it. And the average cost of the toilet, the single pit, is about $300. But this can come down to as low as $100, depending on what materials are utilized. And now, again, depending on the preferences of the client, it can also go up. Thank you.
Thanks, Pamela. And do you have the average income level of the households who are purchasing these toilets?
The average income levels of most households are about $2 or so per day for the poorest of the poor. But then average majority of households earn around $5 to $10 a day.
Thanks.
Thank you.
I'll jump over to Abhishek now. One question came in. Please, maybe you can talk about, since Finnish society is operating for a long time now, what is the sustainability of usage like with the toilets that have been installed for several years? Are the pits always emptied, or when they fill up, do the households stop using the toilets? How is that working in India?
So basically, we follow the twin pit concept in India. So it is like when the first pit is in use, then the second pit is lying idle, and the first pit takes 3 to 4 years to get filled. And once the first one is filled, then the first one is closed and the second one is then in use. So in this way, it becomes a sustainable model. And so when the second one is in use, the first pit which is filled up takes around a year's time to get dried. So now it can be used in an alternate way, both the pits. So which makes it more sustainable.
And
Thank
the
you,
usage
Abhishek.
levels?
Sorry,
Oh.
go ahead, Lauren.
No, just to clarify, Abhishek, can you also talk about the usage levels? I don't know if you were doing studies recently on this from the first toilets.
So no, we are monitoring the usage as well. So the basic objective is not only to construct the toilets, but also to make all the household members to use it. So we are keeping track of the usage as well.
Great. I have one question for Valentine and one for Theo, and then I will throw it back to you, Carolina. Unless there's more, please put them in the pathable.
No, but before we go to Valentine and Theo, I just wanted to use this chance to ask Abhishek, before we were going to talk about how are you scaling up. So now you talk a little bit more about Finnish society. So I wanted to go back to that question before and ask you what is that you're doing for scale up and attracting commercial investments?
So we, for scaling it up, we are getting in touch with more and more MFIs. So presently we have a network of 25 MFIs, and the target is to to triple this number in coming future. And we are also approaching various funders, like various donors who can fund these MFIs for doing sanitation finance. So we are working on both ends, getting more and more partners and getting more and more donors as well.
So you're also partnering with ACTIAM and all the others. You're part of the same team. Excellent. So Lauren, I think now you can go for Valentine and Theo.
Super. Actually, I think I have one more question for either Pamela or Abhishek on the actual program and the systems. And then we go to the finance again. Another question was, are all of the toilets non-piped? If so, is the household responsible for managing the fecal waste, or is that done by a local SME? Are the toilets double vault? And if not, how often do they need to be emptied? So maybe you can give a quick note how it is in Kenya and then how it is in India.
Thank you, Lauren. So for the Kenyan case, we promote the double pits, but then in some cases the households do the single pits. The toilet emptying is done on average every 5 years, depending on their household, the number of people per household. And this is done by a private entrepreneur, because we are also building the capacities of entrepreneurs within the market, and this is mainly their role, because part of the capacity building that we do is for them now to valorize this waste to other byproducts like co-compost. So in short, the private sector through the entrepreneurs are the ones who do the pit emptying. Thank you.
Yeah, in the Indian context, as I earlier said, that we use the twin pit toilet. So here, like once the filled up toilet, which gets dried up, so the dried fecal matter is then taken out and it is used in the agriculture as a manure. And for septic tanks, ideally they need to get like cleaned in every 3 to 4 years. So for cleaning of septic tanks, there is requirement of like other agencies, other vendors, the tank emptiers, and for the twin pit, there is no requirement. It is an on-site treatment actually.
Thanks. Okay, I move to Valentine. There's a question. How does the Finnish model compare to water.org's water credit program? Yeah. Says, I realize that water.org funds are both water and toilets, but otherwise are there similarities?
Thanks, Lauren. I really like that question. So in a way, we're quite similar. We both work with microfinance. We both work to scale. We also have a couple of MOUs with water.org, one for Eastern Africa and one for India. There are some minor differences. I think if you take the Finnish Mondial approach, it's more towards the supply side. So we have a very strong emphasis on training masons, training artisans in building sustainable, safely managed sanitation systems. That's a little bit, it's a slight variation in focus. Both of us do demand generation. Both of us work with MRIs, and on the policy level, I would say that water.org has let's say, capacity to work more on the policy level with government, which facilitates financial innovations like what we're talking about. So ours is a little bit more, it's really a little bit more, let's say, down at the grassroots, and there's a little bit more on the systematic change. So what you see from this is that actually we are very much aligned, and if you look at the market, I think we actually need more Finnish Mondial. We need more water.org to be able to cater to the market. So I think we're working together quite nicely, and we only can encourage more people and partners to join.
Thanks. I move on to Theo then. There's two questions for you right now. First, does your model work through local commercial banks? And if so, do you apply the local interest rate or back the banks to lower their interest rate on loans to make it cheaper?
No. First of all, we are targeting financial institutions who are targeting the microfinance market. So these are not per se commercial banks, but they are also not excluded in that sense. It's a matter of whether financial institutions are willing to join the program and are able to join the program and are also reaching all the indicators that we use to select MFIs who can join the portfolio. So it's a matter of, it's a combination factors. And we provide market-based rates in the loans. And we don't want to sit on the share of the financial institution, how they are going to provide the loans against what rate. But given the fact that they get an incentive, a financial incentive, to reach out to these groups, to these target group, and for them make sanitation loans attractive, we have seen in the market that they are being discounted if you compare that to the regular loans. But some use their regular rates as they have done for other products they are using. And maybe also to add, in what currency we are providing debt, it depends. If they want to have local currency, we can provide local currency loans. If they want to have it in dollars, they can get it in dollars. We make sure that we will hedge the currency risk ourselves to make it also less vulnerable for currency shocks for investors, because that's what investors don't like, to be surprised. So they want to have very predictable returns. So we make sure that it is predictable. So every loan that we provide to investees, to financial institutions, will be hedged on the market. And if it's not hedged, we make sure that it will be cross-hedged or whatever. We make it clear for investors that we want to make the currency risk as low as possible.
And while you're talking about the fund, maybe you can clarify the next question. There's two on the SWIFT. So first, is there a tranche of funding that's protecting the commercial investors? And there's also a note about the perspective on commercial. They say 2 to 4% return seems quite low for the risk of this approach. So investors seem to be accepting the lower financial return due to high social benefit. So maybe you can also speak on these two parts of it.
Yeah. Well, both are very relevant and very good questions. First of all, regarding the way we have structured the fund, for now, in the first series of 50 million, there is no distinction between junior or senior or mezzanine tranches. So we have a very straightforward approach. There's only one sort of participation in the fund. So that means that there is no first loss or a junior investor in the fund. But I know that it is indeed a question also from our institutional investors, that it is desired that there is a first loss possibility. So we are discussing with a lot of partners, and even if in this audience there is an organization who is willing to participate in these discussions, happy to get in touch. But if possible, we will get a first loss or a tranche system in the fund structure. And
Thanks.
again,
And I think I have one final question.
Your second question.
Thank you. Yes.
What was your second question again? Sorry.
I think maybe you can speak to this 2 to 4% return. Return seems low for the risk for the commercial investors.
Well, that's more or less related to the first part. Although I must admit, if I'm looking at our experience and our track record in the financial inclusion sector, so far we have raised about 800 million in the financial inclusion sector for investors, and we provided almost 4 billion private debt to financial institutions in the financial inclusion sector. And we have made a return on average between 4 and 5% net. And that's an achievement. If you're looking at the risk, and you're looking at the emerging market risk, you're looking at the currency risk, you're looking at the political risk, in the end, we have done it extremely well. And that has also seen by institutional investors, because despite the fact that institutional investors like pension funds, they have a fiduciary duty, they have invested in our financial inclusion funds, which says and confirms the impression that the risk return profile fits their mandate. The reason why I projected the return slightly lower is because it's also the first time that we are targeting this very specific sector, and that's also the reason why I'm also very keen to get this first loss on board in our fund structure. But I believe that that not only the institutional sector, but also the semi-institutional sector is interested in these kind of products. So, and they have slightly lower return targets, and some of them, they have no fiduciary duty, or let's say less strict fiduciary duty. So they have more room and more flexibility to adjust their risk return targets.
Thanks, Theo. And I have one more from the audience, and also, it's one or two folks are very excited about this. So I think we can also already schedule some follow-up meetings and talk details. So please drop your emails in the comments and we'll connect you. But okay, the final one I have right now, and then I throw it back to Carolina. On the SWIFT, based on the response from Valentine on the water.org approach similarities, how will this fund compare to the funds that water.org has already raised from impact investors under the water equity initiative?
Yeah. Well, the first very clear difference is that this is 100% pure debt fund. So we are providing only senior debt to financial institutions, which makes it already completely different. As you know, the risk profile of a debt proposition is less lower than an equity proposition. And secondly, our approach is based on 15 years track record, providing debt to financial institutions. As I just explained, what we achieved in the 15 years, we have outperformed the benchmark every year. We have outperformed every year our peers in the market in the financial inclusion sector. And that is, of course, also seen by our institutional investors, which makes us a very reputable and, let's say, credible partner for investors. And of course, water.org is that also, but it's our core business being an asset manager. looking from an institutional point of view at financial institutions, screening in a very profound way how we select the right financial institution to get in our portfolio, which means that we have, if just for the record and for the specialists, our losses in the last 15 years is less than 20 base points. If you're looking at the emerging market financial institution loss rate, is way above 50 base points. It depends on the region, but there are funds who have a loss rate above 100 base points, above 1%. And that is one of the reasons why we have outperformed all our peers in the last 15 years.
Maybe let me just add to what Theo is saying. In the meantime, you've been seeing Pamela, Abhishek, you've been hearing them, and they have been instrumental in developing a pipeline of investments. So the moment the money is raised by ACTIAM, we have a number of MFIs which are in the pre-due diligence stage at this moment. These are our partners. And with each of them, we have a pipeline of investment. So we're working on both angles. So it's truly a partnership. So together with ACTIAM and the Finnish Mondial, which in itself is a partnership, we're making yet another partnership. So in the different countries, we have different organizations working on the demand side. Quite often it's with the government. We're working with local private sector. We're working established private sector. We're working with the MFIs, with the banks. So it is, in that way, it's a slightly different model. I earlier said we are more down to earth. And why is this down to earth is really on the ground? That is because we work with organizations like ACTIAM, who are doing the financial structuring of the whole thing, of the whole fund. And we can focus on what we are good at, that's giving the pipelines to the financial institutions. So that's the addition I would like to make.
Yeah, and maybe also, I don't know exactly the terms and conditions of the water.org proposition, but I think that the financial incentive is also one of the features which is unique, especially in combination with this TA package and let's say the finance line which we offer to them.
Which talks a lot again about that first idea that Valentin brought up, that diamond model that you have, we have also in the background of our screens right now. So you're really addressing everybody that needs to be invited to the conversation. And I think, Lauren, with that, we concluded the questions from the audience. So I have still some questions for our speakers. Can I double check with you? We don't have anything there?
Yeah, go for it. You can jump in. There's maybe a few coming through on response.
Okay, but on that note, I want to sort of reiterate that we want to keep this conversation going. So of course, we won't have time to cover this whole topic because it's so rich and there's so much to say about it. But we want to invite everyone to get in touch with us, with either of our speakers or with me, and to reach out so we can engage and keep talking about this very interesting project. And it's quite a unique experience. Valentin, Theo, you talk a lot about what you have been doing, the track record you have, what you achieved so far. I want to ask you now, what's next? What is that you need? And maybe what is that you expect to do? And I would like to start with you, Valentin.
Thanks, Carolina. So, as I mentioned at the beginning, it's our first time in UNC, and we're very happy to have been invited. But I'm also a little bit new here. And from my side, I think we are, what I mentioned, we are interested in partnerships. We are interested in long-term partnerships. Long-term partnerships, they start with a dialogue. They start with getting into conversation with one another, getting to know one another. And in these COVID times, it all starts online. And we know that face-to-face context is always better, but let's start online. So if you are one way or the other triggered by what we mentioned, by the different viewpoints of, or not the different viewpoints, the different perspectives of the team, I would really request you please get in touch with us. We are entering a dialogue with many more stakeholders, because the ambition is massive. We have a $500 million program which we have to implement in 5 years, and it's for us 2 times as much in half the time. So we can't do it on our own. We need partners, and we need also other things, but I think Theo can maybe add to what else we need.
Yeah, well, I think you have seen the ambition also, how many safe sanitation systems we want to build, how many people we want to reach, and you know that the target of SDG 6, we have billions to go in people who don't have access to safe sanitation and clean water. So there's a lot of funding needed. And if I'm looking very specifically to our sanitation water impact fund, as I said before, that we have the ambition to have a 250 million fund. We start with 50 million. And the main reason why we start only between brackets 50 million is because we are being restricted by the capacity of our TA partner Finish Mundial and our output-based funder Aqua for All, giving their lack of funding to cover all the TA activities which has to be financed. So in fact, we are really looking for funding, for money to provide, to get more capacity in Finish Mundial, so that they can deliver not for 50 million, but for 250 million a package, a TA package, which is necessary to convince financial institutions to get in. And for Aqua for All, which I'm very pleased and I'm very honored that they are financing the first 50 million, but the other 200 million, we are still lacking funding. So we are also, from that perspective, we are also looking for funding for partners in the output-based fund capacity. So that's a clear, help, support asking from our perspective, make sure that we go from 50 million to 250 million, and for that we need grant funding.
That's a more like an invitation. It sounds like a very good invitation, Theo. So I'm sure we'll get some calls there. But if I hear well, there's a lot of ways in which people can get involved in this concept, in this program. Can you both, or either of you, can you tell me how can people get involved? Is there something in particular they need to do after we close this session? Where do the message goes?
Sorry, Caroline, is that a question to me or to Theo?
Both of you.
Both. Let me ask Theo to start, and then I'll chip in.
Yeah, no, I think it's obvious. This is indeed, as you explained, Carolina, this is an invitation to reach out to us, because you have our email addresses, how to find us. reach out to us and make yourself clear. And we are happy to start the discussion, because it's not only from a funding perspective, but also looking at a partnership, looking at investees partnership. There's a lot to gain for many, because we all need each other. We can't do it alone. So reach out to us by email, by phone, or whatever. All my details, my contact details, I have filled in my registration, so it's easy to find me, or Valentin, or wherever. Especially also on the local level, if it's in Kenya or India, you know how to find them.
Or the whole team. I saw that Lauren Paul, my colleague, she just added the email address of the Finnish Mundial program, so everyone can go to the chat and contact all of us at the same time. Wouldn't that be great? And I think what I understand, Theo, is that you're not just making an invitation to send you money. There's a lot of different roles that people can play in the institutions, in the way they cooperate with the program, and there's so much to do.
Yeah, maybe, but I think that's an obvious one. And of course, it's also an invitation to invest, because I'm of course also looking for the right investor who is really interested in a good market return profile with a proven impact and verified impact, which gives you a fantastic financial and impact opportunity for your portfolio.
Yeah, let me just add to Theo. So we are focusing now on one element, because we're talking about result-based financing. But the program which came out a little bit when Pamela was talking about, it's about circular sanitation economy, it's about employment, it's about health. Healthcare financing is one of the topics we're taking on. We think why we can do all these things is because A, we have a great team, and B, we have skill. And because of skill, you can do things differently. You can do things in a way that it makes a meaning. So in a way that you can actually address SDGs. And that means from climate financing to carbon sequestration. So we're not going to these details now, because we would like to focus very much on one topic where we think we have something, what Theo called very rightly, in my opinion, unique. And we have a very strong team on the ground who can deliver results. We have a reliable partner who has been doing this for years. And as a partnership, it also should give a lot of confidence. We have been in existence for 13 years. And we are actually looking to, for another, well, what do we say, 9 years or beyond. In case we don't reach the SDGs, we'll continue trying to reach them. With that, I really would like to thank the audience and the fellow team members, and you, Carolina, and Lauren, and Laszlo on the background for helping us in this session. So we look forward to the continued interaction with you all. And yeah, hopefully next year we'll meet, but then we'll meet live. So that to me is
yes, indeed. I hope that, and the next year we'll ask you about results, because you will have a lot done by then, and I'm sure we'll get very close to the SDGs. There's not much time, but I know there's a lot of people that is very interested in getting there. So we talk a lot about. I think we have a couple of more minutes, and we've been talking about all the things you're doing in the different countries. And I think one really special thing about this program is that you are working at a country level with country teams. And we had Pamela and Abhishek talking about that, but a picture says more than 1,000 words. So I want to ask Abhishek to show us that slide where he has some pictures actually about what he's been doing. Can you, Abhishek?
Yeah, sure.
There we go.
So yeah, so in the first row, you can see the 3-tier training, which I was telling about. So for the senior management, the middle management, and for the field team. And then in the below column, you can see the village meeting being conducted. Then you can see it's followed by the Mason orientation, which we do at the MFI branches. And then the last picture is about the app-based validation, field level validation being done in the field.
Thank you, Abhishek. So that's
you.
very real. It's not just numbers that we're covering on today. We're not just talking about numbers there. So this real things happening. And with this, I would like to end and thank our sponsors. And thank you, Theo, Pamela, Valentin, Abhishek, but especially to Lauren and Laszlo, who have been supporting this session. Reiterate that we want to keep this discussion going. So not just next year, throughout the year. So please get in touch and we'll make sure that we cover all the questions that were left unanswered, although we try our best to cover as much as possible. Thank you, everyone.
Thank you very much.
Thank you.